Chapter 2, The Evolution of Economics, Money, and Computing. Section 2.1, The Role of Central Banks and Governments in Shaping the Economy. As we embark on our exploration of the evolution of economics, money, and computing, it is crucial to understand the role central banks and governments have played in shaping the global economy. Over the centuries, these institutions have wielded considerable power, managing monetary policies, interest rates, and the money supply to maintain economic stability and support growth. Central banks, often established as independent entities, have been entrusted with the responsibility of regulating national economies. They have been granted the power to issue and manage currency, set interest rates, and oversee the financial system. By controlling the money supply and influencing the cost of borrowing, central banks aim to maintain price stability and support economic growth. However, this concentration of power in the hands of a few has not always resulted in positive outcomes. Central banks and governments have been known to manipulate currencies, leading to inflation or deflation, which has caused devastating consequences for ordinary people. The lessons learned from the Great Depression of the 1930s and the hyperinflation experienced in countries like Zimbabwe, Venezuela, and the Weimar Republic in Germany underscore the dangers of poorly managed monetary policy. Moreover, since the 1970s, we have witnessed a decline in productivity growth, largely attributed to centralized power structures that have stifled innovation and hindered the efficient allocation of resources. Governments have often succumbed to short-term political pressures, prioritizing policies that benefit the elite few while neglecting the needs of the broader population. In recent years, the global financial crisis of 2008 and the subsequent recession have further exposed the flaws of centralized financial systems. The crisis revealed the vulnerability of economies built on debt and the fragility of the banking system, with governments and central banks scrambling to prevent total collapse through massive bailouts and unprecedented monetary stimulus. As we confront the limitations and consequences of centralized power structures, the emergence of cryptocurrencies and blockchain technology offers a potential alternative to the traditional financial systems. By leveraging decentralized networks, cryptocurrencies promise to reduce the influence of central banks and governments, empowering individuals and communities to take control of their financial destinies. In this section, we will delve deeper into the role of central banks and governments in shaping the economy, examining both their successes and failures. By understanding the historical context, we can better appreciate the revolutionary potential of cryptocurrencies and blockchain technology in reshaping our economic landscape and paving the way for a more equitable and sustainable future. Section 2.2, The Consequences of Centralized Power Structures and the Low Productivity Since the 1970s. Centralized power structures, epitomized by central banks and governments, have significantly influenced modern economies, leading to unintended consequences that negatively impact society. These consequences include declining productivity since the 1970s, unsustainable debt growth, and deepening wealth inequality. To understand these consequences, we must examine the relationship between energy efficiency and economic growth. St. Angelo's theories highlight the decline in ROE ratios, which represent the energy efficiency of extracting resources like oil, leading to an erosion of the underpinnings of our industrial and economic systems. As energy extraction became more costly and less efficient, societies turned to debt and credit to maintain the illusion of progress. This shift from a focus on tangible, energy-driven growth to a reliance on financial engineering has far-reaching implications. Increasing debt levels have created systemic instability and contributed to financial crises, such as the 2008 crisis. The consequences of these crises disproportionately affect those with the least access to financial resources, exacerbating wealth inequality and social unrest. In the face of these challenges, the emergence of cryptocurrencies and blockchain technology offers a potential alternative to centralized power structures. These decentralized technologies have the capacity to disrupt traditional financial systems, providing a more transparent, equitable, and efficient means of exchange. By leveraging the power of decentralized networks and open-source technology, cryptocurrencies and blockchain can help address the financial and economic challenges that have resulted from centralized power structures. Cryptocurrencies and blockchain technology do not directly solve the ROE problem, as they don't increase the efficiency of energy extraction or the availability of resources. However, they can contribute to addressing the issues arising from centralized power structures that have contributed to unsustainable debt growth and lack of transparency. The decentralized nature of cryptocurrencies and blockchain technology can promote more efficient, transparent, and equitable financial systems, which may indirectly influence the way governments and institutions approach energy and resource management. By reducing the ability of centralized authorities to manipulate financial systems and create debt, blockchain technology can encourage more sustainable and responsible fiscal policies. Moreover, the inherent transparency and immutability of blockchain technology can help to increase accountability and reduce fraud. This can lead to better governance and decision-making, potentially leading to a more responsible and sustainable approach to energy and resource management. Another aspect to consider is that blockchain technology can be used to create more efficient systems for tracking and managing energy resources, promoting more sustainable energy consumption patterns. For example, blockchain-based platforms can enable decentralized energy markets, allowing for peer-to-peer energy trading and more efficient allocation of renewable energy resources. However, it's essential to understand that cryptocurrencies and blockchain are just part of the equation. Other factors, such as effective policy making, technological innovations, education, and social factors, also play a crucial role in driving real productivity and sustainable economic growth. In conclusion, the consequences of centralized power structures and the low productivity since the 1970s have had a profound impact on our society, contributing to wealth inequality, financial instability, and unsustainable debt levels. The insights provided by St. Angelo and others, along with the emergence of cryptocurrencies and blockchain technology, offer a potential path forward that can help address these challenges. By embracing decentralized systems and open-source technology, we can work towards a more equitable, sustainable, and resilient economic model for the future. Section 2.3. The emergence of cryptocurrencies and their potential to disrupt traditional financial systems. The dawn of the 21st century saw the birth of a revolutionary technology that promised to challenge the status quo of traditional financial systems, offering a more democratic and decentralized approach to managing wealth and resources. Cryptocurrencies, such as Bitcoin, emerged as a response to growing dissatisfaction with centralized power structures and the shortcomings of existing financial systems. At the heart of cryptocurrencies lies the blockchain technology. This decentralized, secure, and transparent ledger enables recording transactions without the need for intermediaries. This unique combination of features has the potential to disrupt traditional financial systems by addressing some of their most glaring issues. One of the most significant impacts of cryptocurrencies is the decentralization of financial power. By offering an alternative to central banks and government-controlled currencies, cryptocurrencies provide individuals with greater financial sovereignty, allowing them to take control of their own financial destiny. This decentralization shifts the balance of power from centralized institutions to the individual, fostering an environment that is more conducive to innovation and economic growth. Cryptocurrencies also have the potential to dramatically increase financial inclusion. Traditional financial systems have left billions of people unbanked or underbanked, without access to basic financial services. By providing an accessible and cost-effective solution, cryptocurrencies can empower these individuals to participate in the global economy and improve their quality of life. This financial democratization could drive economic growth in regions that have been historically underserved by traditional banking systems. The security and privacy offered by blockchain technology is another critical advantage of cryptocurrencies. By ensuring that transactions are secure, tamper-proof, and private, cryptocurrencies provide a more secure alternative to traditional forms of money storage and transfer. This level of security can help build trust and confidence in the financial system, particularly among those who have been victims of fraud or identity theft. Cryptocurrencies can also lead to increased cost efficiency in the financial sector. By eliminating intermediaries and streamlining transactions, they can significantly reduce transaction costs and fees. This efficiency creates savings for both businesses and individuals, freeing up resources for investment, innovation, and growth. Moreover, the resilience and adaptability of cryptocurrencies make them a valuable addition to the global financial landscape. Unlike traditional currencies, they are not subject to the same political and economic risks, such as inflation, exchange rate fluctuations, and geopolitical tensions. This immunity makes cryptocurrencies a more stable store of value in uncertain times. Finally, the programmability of cryptocurrencies opens up a world of possibilities for innovation in the financial sector. Through smart contracts and decentralized finance (DeFi) platforms, blockchain technology can create new financial products and services without traditional intermediaries. This innovation has the potential to revolutionize the way we conduct business and manage wealth. While the potential of cryptocurrencies to disrupt traditional financial systems is evident, it is crucial to acknowledge the challenges and risks associated with this emerging technology. Issues such as regulatory uncertainty, scalability, and energy consumption must be addressed for cryptocurrencies to become a viable and mainstream alternative to traditional finance. In conclusion, the emergence of cryptocurrencies and their underlying blockchain technology holds the promise of disrupting traditional financial systems and creating a more decentralized, inclusive, and efficient global economy. By embracing this technology and addressing the associated challenges, we can harness the power of cryptocurrencies to address global challenges and create a more equitable and sustainable future for all. Section 2.4. The shift from centralized to decentralized power structures in finance and governance. As the world grapples with the consequences of centralized power structures, we are witnessing a paradigm shift towards decentralized models in finance and governance. This transformation is driven by the rapid development of digital technologies, particularly cryptocurrencies and blockchain, which offer alternative systems that challenge traditional hierarchies and promote greater transparency, equity, and efficiency. Centralized power structures have long dominated finance and governance, with central banks, governments, and large corporations holding significant influence over the allocation of resources and decision-making processes. This centralization has led to issues such as wealth inequality, corruption, and a lack of accountability, which have eroded trust in institutions and contributed to social unrest. The emergence of decentralized technologies, such as cryptocurrencies and blockchain, offers a potential solution to these challenges. By enabling peer-to-peer transactions and creating consensus mechanisms that bypass traditional intermediaries, these technologies empower individuals and communities to take control of their financial destinies and participate in decision-making processes more directly. Decentralized finance, or DeFi, is one example of how this shift is playing out in the financial sector. Built on blockchain technology, DeFi platforms enable users to access financial services without relying on centralized institutions. This innovation has the potential to democratize access to financial services, particularly for those who have been historically underserved by traditional banking systems, and reduce the influence of central banks and governments on the economy. In the realm of governance, decentralized technologies can also facilitate more participatory and transparent decision-making processes. By leveraging the power of blockchain, governments and organizations can create secure, tamper-proof systems for voting, land registry, and other critical functions. This can help reduce fraud, corruption, and bureaucracy while ensuring that citizens have a more direct say in the decisions that affect their lives. Furthermore, the shift towards decentralized power structures can promote a more resilient and adaptive economic model. By distributing control and decision-making authority across a larger number of participants, decentralized systems can become more resistant to shocks and better able to respond to evolving global challenges. However, this transition to decentralized power structures is not without its challenges. Issues such as regulatory uncertainty, technological barriers, and concerns about privacy and security must be addressed in order to ensure that decentralized technologies can deliver on their promise of a more equitable and sustainable future. In conclusion, the shift from centralized to decentralized power structures in finance and governance represents a profound transformation with the potential to reshape our economic and political systems. By embracing the opportunities presented by cryptocurrencies, blockchain technology, and other decentralized innovations, we can work towards a more transparent, inclusive, and resilient future that empowers individuals and communities to take control of their destinies. Section 2.5. The role of open source technology in shaping the future of finance and computing. Open source technology has long been a driving force behind innovation and collaboration in the world of computing. By offering unrestricted access to software code, open source projects foster a spirit of cooperation and collective problem-solving that has led to groundbreaking advancements in technology. As we look to the future of finance and computing, the role of open source technology is poised to be more influential than ever before. One of the most transformative aspects of open source technology is its capacity to spur innovation. By allowing developers to access, modify, and distribute source code freely, open source projects encourage a constant exchange of ideas and creativity. This collaborative environment leads to the rapid development and improvement of tools and applications, which can then be used to address a wide range of challenges in both finance and computing. In the realm of finance, open source technology has already begun to reshape traditional systems and practices. Cryptocurrencies, such as Bitcoin, are built upon open source protocols, allowing for continuous improvement and adaptation by a global community of developers. This has contributed to the rapid growth and adoption of cryptocurrencies and blockchain technology, as well as the emergence of new financial solutions such as decentralized finance DeFi platforms. DeFi platforms, which leverage blockchain technology to offer financial services without intermediaries, have the potential to revolutionize the way we manage wealth and conduct transactions. By utilizing open source technology, these platforms can create innovative financial products and services that are transparent, secure, and efficient. This has the potential to democratize access to financial services, particularly for the unbanked and underbanked populations that have been historically underserved by traditional banking systems. The impact of open source technology extends beyond finance, driving advancements in fields such as artificial intelligence, machine learning, and data analytics. These technologies have the potential to revolutionize various aspects of our lives, from healthcare to transportation and beyond. By harnessing the power of open source technology, we can accelerate the development and deployment of cutting-edge solutions that address global challenges and improve the overall quality of life. Moreover, the open source movement has the potential to democratize access to technology and knowledge. By lowering the barriers to entry, open source projects can empower individuals and organizations, regardless of their size or resources, to access the tools and knowledge necessary to innovate and compete in the global marketplace. This democratization can help reduce wealth inequality and promote economic growth in regions that have been historically disadvantaged. In conclusion, the role of open source technology in shaping the future of finance and computing is both vast and essential. By fostering an environment of collaboration and innovation, open source projects can drive the development of new financial products and services, as well as advancements in fields such as artificial intelligence and data analytics. By embracing open source technology, we can work towards a more equitable, sustainable, and prosperous future for all.